we're going to look at the US dollar versus the JPY now. And there's been a bit of a tone change in here as we expected. So when this low came right here and it hit the support, we said that it wasn't likely that that was going to be the low. It was very likely that it would be tested out in this time frame. And you can see it pulling back in here. Now what's happening right now is there's like a squeeze going on in rates. So US rates coming down pretty significantly. Japanese yen rates have nowhere to go on the downside. So that means that it's more favorable for yield purposes to be in the dollar than in the Japanese yen than in the dollar. We're seeing that pullback going on. We expect this to last now for some period of time as we get further pullback here in the dollar versus the Japanese yen. So we said that the dollar was stronger than the euro, stronger than the British pound right now with some time to go. But when you look at this, the Japanese yen is actually stronger than the dollar. So that makes the Japanese yen the strongest currency right now when we look at this. So we're looking for the dollar to maybe pull back for a few more days from this little bounce. Then have a rally and move again to the downside in there. And we don't really see a low here till we get to the third minor cycle. That's in March right over there. So there's a March low there. There's a March low here on the weekly. And you can see how there is a timing sync right there when we look at that the low expected on the daily and the low expected on the weekly come out pretty much the same. So that means that you can short the US dollar versus the Japanese yen with a high probability of success based on what we're seeing in here. So that is the US dollar JPY.